And this is like the 100% truth. Like the sellers now are sitting ducks. They're worried. They gotta, instead of the buyer, how much more do I have to pay to get this house? The sellers are now like, how much more do I have to drop my price to sell the house, right?
Today, we're going to be talking about the Canadian housing market. Absolute mortgage disaster is going on with my good friend, John Flynn. Go over to his channel and check him out. Absolutely great stuff. He's also on Twitter. You can check him out here. Check out his YouTube channel. John, how are you doing today, my friend?
Good, Luke. Always a pleasure. Thanks for having me on. And yeah, I can't wait to talk about these mortgage shadow defaults and all this unknown things that are happening behind the scenes.
Yeah. And you know what? Let's kick it off with that. So you sent me a load of stuff, and thank you for doing that. So what I'm going to do is I'm going to put on my screen the message was sent to you, I'm guessing, or somebody else, or you got it off X about the Scotiabank and RBC, what's happening with the payments. This is really interesting.
Yeah, so once the Bank of Canada dropped their rates, that 0.25%, which I thought was way too soon. And actually, they just came out with a report saying that they were contemplating waiting till July now. That just came out this week too, so it makes sense.
Oh, interesting.
But so this user that messaged me directly, this is to me, I'm not going to show their name, obviously, but they have 2 variable rate mortgages with the fixed payments, and with 2 major banks, one with RBC, one with Scotiabank. And the one payment, once the rate dropped with the Bank of Canada, the one payment went down and the other one didn't. So the other one, the one that went down, they decided, well, we're not going to reduce that extended amortization most likely, right? Which is crazy. Where the other one, I forget which was which, RBC and Scotiabank, but the other one said, no, your payment's not going to drop. So usually with a variable, your payment drops, or the rate drops, your payment drops. Well, they said, no, we're not going to drop your payment, which makes sense, right? It's a responsible thing to do because we need to start reducing that extended amortization. So these banks are playing different games here. One's reducing, trying to reduce amortizations, and the other one's not, which is just crazy. So it was really interesting to get this message. This user knows exactly what's going on and kind of how messed up it is behind the scenes.
Yeah, that is kind of crazy. And, I think it might be because Scotiabank, I believe, is the only one, that increases the payment. He didn't put on here what his payments were with Scotiabank, but I'm guessing his payments went up massively, and then they cut rates 25 basis points, so he saw that in his payments, whereas the RBC one, that is absolutely crazy. So that guy could be underwater on that RBC mortgage completely, and they're just saying, no, we're not gonna bother reducing your payment because essentially your amortization. What's gonna happen, John? And are you already starting to see it? Because obviously a lot of these renewals are going to come through in 2025 and 2026. It's going to be an absolute disaster. Are you beginning to see people that are starting to sell to get kind of ahead of that?
So there's a lot of people that are selling. Like tons of listings have hit the market all over Canada, and you can read from any real estate agent or ex-user, or there's videos all over the place. So we're already seeing that. You won't see the end users sell until they have to, until they're forced to sell or they lose it to the bank, right? That's when you're going to see all these defaults increase. But you're seeing a lot of these investors, they're dumping these properties because I don't know why they're only realizing now, like that 1/4 point rate cut, it didn't do anything. And even if it did, maybe a lot of them are going to see now, hey, my payment didn't go down because I have like this 72-year amortization. So you are seeing inventory like hit the market. We have the highest inventory since like 2020, early 2020 right now. So yeah, you will see continued inventory increases, and it's just going to be all part of the cycle. Like I always say, defaults are going to increase, listings are going to increase. There's going to be a lot of stress out there in the system, and it's going to happen.
I totally agree with you. And I'll just bring up the CBA numbers because you notice something about these numbers. I've talked about these numbers before, how if you go back to the 1990s, Globe and Mail was reporting defaults. I forget what it was without looking at it, but I think it was around 8 or 9%. And the CBA at that time wasn't even 1%. But you notice something even more interesting about these numbers, and it's only certain banks. So go ahead.
Yeah. So when you look at who's included, right, in the CBA information or in the data that they release, you'll see there's 11 of the kind of major banks in Canada, and they're all listed there at the bottom in the blue highlights. These are the ones that are included. And of course, the CBA brags, or whoever it is, the government, but it's the CBA also brags because we have such a sound banking system in Canada, right? This is going to be our downfall, our sound banking system, by the way, because everyone relies on it like it's never going to break, and they can do anything, right? We're like, it's like invincible after 2008 thing. And again, they brag about it here, and we can read it, right? It says Canada's percentage of mortgage in arrears is also significantly lower than in the United States and the United Kingdom. And they talk about despite the economic, conditions and all the rest of this. So they're like so happy that they brag about it. But this data is only a small fraction of the reality of all mortgage arrears. And I sent you a couple of pie charts there. And the one I've broken them down into two separately. But the first one with the three sections on it, the bank sales percent in Ontario. So this is the data I have access to. And you can see the CBA big banks, those 11 banks that are included, they make up just 20% of the defaults of the bank or power of sales on the system in the GTA and the surrounding areas. So again, one of the biggest epicenters in Canada, right? So it's very representative. And then the alternative and the private lenders and the credit unions make up like 77, 78%. And of course, even the mortgage insurers, there's three major mortgage insurers in Canada, they have about 2% of those power of sale listings. These are active listings. I don't track them after they've been sold. These are just active on MLS. So of course, they rotate through. These aren't fixed numbers of listings. One thing I found really interesting, I don't know if you want to get into that now, and I'm not going to say the name.
This video was powered by ExpressVPN, helping you protect your privacy with the world's fastest VPN and the VPN that I use. If you want to take advantage of my special offer, go to expressvpn.com/marketmania. Let's get back to it.
But the next chart with the green slice of pie. So I've broken it down and I've taken this out of the blue section. This is actually part of the blue section of the other. It's one single mortgage investment corporation that has like 6% of all defaults. So this mortgage investment corporation is like where you can go and say, hey, I want to invest in something. Maybe I can invest in some private lending, but I don't want to lend myself, but I want to be part of this corporation and I'm going to see returns 9 or 10%. And they had the biggest number out of any single entity, whether it's a big bank or any other private thing. Like these guys make up 6% of all defaults. I kept seeing this name, right? And I'm not going to name their name. I don't want to be sued for libel or whatever, but it's like, it's not looking so good for this investment corporation. And these are, again, it's like a private style lending and with big returns promised to. And of course, we know when there's big returns promised and when things aren't going the way they should be going in the economy and people are losing their homes, well, I just don't see those returns being fulfilled for much longer. And I think we're going to see a headline soon with some of these investment corporations. We've already seen some, I think, last year too, or at some point, I think it was out west somewhere. It was more of a Ponzi one. This is not, I'm not saying this is a Ponzi, but it's not a tight-knit operation, kind of a little loosey-goosey on the returns there at this point, considering 9 to 10% these days for mortgages. I
think a lot of them have not frozen redemptions, sorry. A lot of them have seen so many redemptions that they're not renewing people's mortgages as well, which is also leading to problems. It also says on that chart, that's just Ontario data, right? That chart?
Correct. Yeah. So this is just Ontario and so it's the majority of Ontario. It's not every board. It's only what I have access to. So it's probably including Toronto and 20 something boards, but it's a major part of Canada that's included. Also, one other thing with that investment corporation, that's a single corporation there. This is not like a publicly traded company, from what I can tell. I looked into it. So you're not going to see, redemptions are frozen in the news, right? It's just going to be a story one day like that mortgage broker, right, from Ontario with the 630 or that mortgage broker and the realtor that defaulted on those 630 units and made off with all the money on their private jet or on their wherever. They have like bills from some place in Florida spending, $10,000 or $20,000 in booze while they're partying with this money, right? So
And another thing, John, I'm looking back now at the CBA data. And if you were just to use this data as a very base, we know it's not accurate, but we can kind of say, well, the defaults by province, the percentage of arrears to total number of mortgages is probably somewhat accurate. I mean, the numbers aren't that large, so it's hard to say they're totally accurate. But if you look at Ontario, it's one of the lowest. So if you imagine what's going on in Ontario, which you've just pointed out with those pie charts, I mean, imagine what's going on in Saskatchewan, in Alberta, the boom town. We'll get onto that later, and British Columbia, and also Quebec and Atlantic Canada. I mean, things have got to be considerably worse in those provinces, right?
Oh yeah. So it's hidden a lot in Ontario because of all those private lenders, and there's so many like mom and pop lenders too that are included in that other section of those charts. So it's like it is hidden, like Ontario's arrears and defaults. And again, this is only as of March, right? Because they're backwards looking because of course they don't know.
And
if
we're in
someone's
June,
defaulted.
just
Yeah.
to let you know.
Yeah, so we'll know like and again, I track the mortgage defaults on the system, and I just sent you an updated one of those yesterday too. It's a little early for me to report on it. I used to like to do every 3 to 4 weeks, but since we were doing this video, I sent you that. And again, it's up. And the last time I did it was the week starting June 2nd, and now I just did it this week starting June 16th, which was Sunday. But yeah, you can see again they're up for both ITSO and TREB, which is ITSO is the 20 boards surrounding the Greater Toronto area, and TREB is the Toronto Real Estate Board. So you'll see like, yeah, I just did them, and again, they're up again. And it's like I look at the ownership, and there's so many like just private corporations and private lending out there. It's crazy. And I remember back after '08, I've sold homes to friends and clients that they still live in them from, bank sales. And it wasn't as common to see these corporations. Like, yeah, there was a few, but like private corporations were few and far between in the mortgage default business back then. So it's just whole other business that's just like grown in the last decade or so. And a lot of it was necessity because the banks wouldn't finance these properties. The appraisals wouldn't come in, or the people didn't have the income. They couldn't produce a fake letter for the bank or the fake income or whatever the case may be. So they'd go to these other alternative or private lenders, and they're paying hefty percentages or hefty interest rates on these things too. It's a lot worse, or we're a lot worse off. And it's just like everything. It's being hidden with extended amortizations, or it's private lending, and they just look at the numbers, that the traditional numbers, right? Extended AMs and private lending en masse is not traditional. These are new things that are in part of this cycle that weren't part of the last cycle.
Yeah, totally. And I've just put on screen that amortization picture that you sent me. I saw that on X as well a while ago, with the amortization remaining 72 years and 6 months. And I think a lot of people misunderstand that as well, because they think that they're going to be able to kick the can down the road forever. But then when it comes to renewal, these people are completely screwed, right?
Yeah. Oh yeah. So now look at this one, the one there with the 72 years that you put on. So this was as of December 31st, 2022, right? And look at the rate when it started in January 13th, 2022. And look at the rate then. So the rate even at 5.545 was way better than it is now. So just think of where these people are at this point. This was
because it would be like 7, right? 7%.
Yeah, plus 72 years. Like they must max out. There is a trigger. So there must be multiple triggers, right? The first trigger is like, oh, you hit your thing. Oh, but now we're going to extend it anyway. So don't worry about it. What are they going to let them go to? 200 years? Like if these people were at 72 years on December 31st, 2022 at 5.5%, where are they now? Like, I'd love to know. Like, send me some of these things. Like, take your name off it and send it to me, because it's unbelievable that we could be at this point, right? So I'd love to know where they're at, because they only did the first rate cut last month, or sorry, this month. It was this month, beginning of this month.
Yeah.
And then you had the other one too, right? Which was the other one. It's got like RC Housing Canada or whatever, Canada Housing, 95 years.
Yeah, got it. The tweet. Yeah. Thank you for watching this preview of the interview with John Flynn. If you want to continue this, then subscribe to my podcast channel and click the link right here to get the full video. And if you're looking for a VPN, go to expressvpn.com/marketmania.